Where's the housing market going and what to expect in the rest of 2025? Hey, I'm Kevin Shoemaker with eXp Realty, and I'm here with this month's market trends update, where we're going to give you an update on where we are currently in the market, as well as look at some national and local trends that we're going to share with you, so you're better informed and understand where the market is, where we're going. So whether you're looking at buying a home, selling a home, you have the information necessary. So let's jump in and take a look at some national stats. So when we look at, sort of the theme right now is new construction, because new construction has really been driving the inventory. And what you'll see here is that we're starting to see a rise in the current inventory. As I shared with you in previous months, we were still definitely our new construction inventory is definitely much lower than pre-pandemic, but our inventory is much higher than what we have been for quite a while post-pandemic. So what you'll see here is we have a rise of about 9.8 months of supply in new construction on a national level. So you can continue to see that gradual increase in inventory. And I think as many could, if you're out currently looking and active in the market right now, you could probably attest there's definitely some great opportunities in that new construction market. Now, one of the things we're seeing is incentives. 57% of the new home communities in the month of May were offering incentives. Of those, 75% of them were offering aggressive incentives for homes that already were completed. And what you're also going to see is that we're starting to see a much difference in mortgage rates when it comes to buying new construction versus a resale. What we mean by that is these builders have relationships with many large mortgage companies, and what they're doing is they're buying the interest rates down and incentivizing. So here you'll see, on average, you're seeing about a half a percent lower interest rate when home buyers are going the route of new construction, because again, these builders are sitting on that existing inventory and they need to move them. And one of the things you'll see, as we talk about every month, is the bell curve of sales volume in real estate, especially here in Northern Colorado. When you look at the bell curve, we're at the peak bell curve right now. July is the highest sales volume when you look at the whole annualized, when you look at the 12 months of sales. So we are at the peak volume wise, but what these builders are feeling is that there's a stall in the market. That's concerning, and they're starting to unload some of that inventory faster to get it gone before the fall market hits. Now here what you'll see is again, this is the percentage of builders that are doing price reductions. So you can see the trend. They're getting nervous about they're getting nervous about this, how stagnant the market has been so far in the spring and going into summer. And they've already been burnt before of sitting on that inventory over the fall and winter months and taking much more drastic price reductions. So again, they're going to be much more proactive right now in offering those opportunities and incentives to home buyers that are out there. Now here we look at the buyer and the seller dynamics. And with this, those numbers have actually flipped. So there's actually more sellers currently in the market than there are buyers, active buyers. Now there's a catch there, is there's actually more buyers wanting to buy than sell, but so many of those buyers are currently on the sideline because of affordability, because of where we're sitting in mortgage rates, which we'll talk about in just a minute. Where we're sitting in mortgage rates right now is priced them out of the market. So they're having to actually sit on the sidelines and wait, which means that we have more of a surplus in sellers right now than we have in buyers. So again, if you're looking at purchasing a home, now more than ever is a great opportunity with some good deals and well-priced homes. Now, what you'll see here is on a national level, is we're seeing a deceleration in home appreciation. Now that doesn't mean that prices are dropping. What we're seeing is the appreciation levels that we've once seen of 7, 10, even 14, 15% in our market over the last, going back maybe 3-4 years ago. We're now seeing that drop, and we're sitting in that 1 to 3% right now. So again, it's a deceleration, not necessarily a drop in prices. Now, what we'll see, and I'll share with you on our local numbers, but what we are definitely seeing is a lot of agents are not adjusting to the market. And what I mean by that is they're not adjusting their conversation with their sellers. And so they're going off of old comparisons, or maybe they're going off of what the seller would like to have, or what they need to have. But that just because you would want a number or you need a certain number out of your home doesn't mean that the market will bear that. So we definitely have a high percentage of listings that are sitting. It's because they've been overpriced and the agents haven't communicated and properly educated the sellers on where they need to be to act, to be competitive in the market and get their home sold. Here we look at the home price forecast. And so what you'll see here is there's 8 different large companies in our real estate world that were asked how they would forecast the numbers going forward through the rest of 2025. You'll see Redfin and Zillow have a little bit more of a negative outlook on it, where the others are going to be a little bit more optimistic. But you'll see most of them, I think it averages out at 1.9% is what they expect from now to the end of the year. So again, relatively flat, especially with them forecasting that interest rates probably aren't going to drop much, and I'll break that down in a second as well. So here we go in 2025 the home price forecast, and you'll see here originally at the beginning of the year, you'll see where the forecast was. Now the ones in the green are the different organizations that actually increased the percentage of where they felt we were going to be at the end of the year, where they're a little more optimistic, where the ones in orange are going to be more neutral, and the ones in red are going to be the ones that are saying, our numbers aren't going to hit what we once forecasted based on A, B, and C, which is primarily going to be interest rates. So again, what we predict here in northern Colorado is we're going to be relatively flat. You'll see maybe a little bit, but we're going to be relatively flat. And those sellers that are going to be selling are going to be pricing their homes right. There's many people that are wanting to get their homes sold before school starts here in August, September, and there's other people obviously that want to get their homes sold before the snow flies in October, November. Now, when we talk about mortgage rates, we're expected to be somewhere in that 6.5, maybe 6.75 range. It's bouncing around. There's been a lot of volatility, obviously, with a lot of the tariff talk and some of the different economic down pressures in the market. It's been much more volatile. We expect that that's going to level out, but also on a national level, what it looks like is we're going to be probably somewhere in the 6.5, 6.65 range from now, probably going into early spring of next year. Now, what you will see here is sales will remain low, but our sales volume is actually going to be slightly up a little bit from what it was last year. Again, when we look at pre-pandemic levels, our volume is much lower. Post-pandemic, we're continuing to build and come back out of it. And when you look at our volume, even here locally, you'll see that we're a little bit ahead of schedule, and I'll break those numbers down in a few minutes as well. Now, here's the newly built homes. Now, one of the things I'll share with you, and I don't want, it seems like at times some of this data gets contradicting, but what you'll see is we see a slowdown in new starts, but we're seeing a consistent amount of properties sell. What happens with these developers when they're developing a new project, when they do new starts, they're forecasting their starts because they need to pull the permits, have all their financing, have everything in line, typically 6 to 8 months. 3 to 6 months before they can actually dig the hole. So they're forecasting in advance, and they're saying, okay, how many do we need to have in the start? So they're trying to time everything for the spring market, which is typically when we have a ramp up. But most of the builders will typically break ground in January, February, because they want to be a drywall stage by spring and summer. So again, it's really tricky in the timing with these builders of when to have the inventory ready. And that's where we're seeing sort of a lot of them with these incentives is they missed the timing of it. They anticipated the high volume. We weren't there. They had to unload. They don't want to have the carrying costs. So again, we're going to level out here on our new construction sales. And as far as the sales volume, be pretty similar to what it was last year. Here's what you'll see is there's going to be fewer new homes coming to the marketplace. And what that is these builders, it's been so volatile going up and down that when you look at some of the large builders that have been surveyed, a lot of them are just saying, hey, we just can't afford to continue to take these risks, and we got to pull back on our expectations for 2025, especially 2026, and we're going to pull back on our starts and really let the market start to level out. Now, what that does is that creates an opportunity for sellers out there that are looking at selling their home on the resale market. Because when you have fewer new construction homes that you're competing with, that now all of a sudden will increase, and that'll drive the prices up on the resale market as well. So typically a new construction home will bring 10 to 15% more than a resale home. So again, we're going to start to see maybe a little more of an uptick in values for the resale market. So what we know is that shoppers are in the market are, they're shopping for a new home. Will still have many different options out there, and that they need to be in a good place, and that there will be in a good place to negotiate. But also knowing that the builders are adjusting their outlooks on the slowing and development pipeline, which can mean that new homes are going to be much harder to come by next year. So again, creating more opportunities for the sellers on the resale market. Now, let's jump into inventory and talk about our local market. So we first start with our inventory for new home sales. The inventory amount of total homes for sale in our market. So we look at June's numbers. Fort Collins is sitting at 825 homes, 821 in Loveland, and 748 in Greeley. Now what you'll see is again, we're on an increase, we're on an incline, and that's pretty typical when you look at our seasonal curve. Our inventory is definitely up quite a bit when you look at 2024. I mean, we're up almost double what our inventory was in 2024. We're up a little more than double, or a little more than double in 2023, and we're actually almost four times the inventory now than what we were in 2022. But again, what I'll say is we're getting back to a normalized market, because we have somewhere between 3 to 4 months, 4 to 5 months inventory. 5 to 5.5 months is what they consider a normal and balanced market. So here we'll see new listings. We've seen a peak going into May and June, May and early June, and then we've seen a little bit of a drop off. And I think the little bit of the drop off was, again, a little bit of uncertainty in the marketplace, a lot of economic pressures, and then obviously with some of the holidays and slowdowns as well. You got a lot of travel, family vacations. So this is sort of a typical little bit of a dip of a curve. Here we'll look at average days on market. We're starting to see again this trend of the average days on market going up. Our average days on market are still going to be similar to what we saw in 2024, much less than 2023. So average days on market, 56 in Fort Collins, 74 in Loveland, and 71 in Greeley. Now, closed sales. We saw a little bit of a peak in May, and then it dropped down a little bit for Fort Collins and Greeley, but also increased a little bit in Loveland. So looking at 297 homes that sold in Fort Collins, 280 in Loveland, and 283 in the Greeley market. Under contracts, this is really the pulse of the market. This is what's happening right now, because when we look at the sold data, that's typically going to be 30 to 60 days old. So here we're going to see, again, there's currently 278 under contract in Fort Collins, 240 Loveland, 242 in Greeley. So again, a little bit of a drop by probably about 50, 60 homes in respectable markets. Here is your average percent of original list to sales price ratio. And this is really a number that is important to look at, because it is not uncommon for a lot of people to hear the data, hear the reports, and say, Kevin, let's go in and beat that seller up. They're going to drop 50,000, 100,000. Not realistic generally speaking in our market. You're seeing on average 98% in Loveland and 98.4% in Greeley and Fort Collins on the average list. The list to negotiated sold price. So we're not seeing an extreme amount of negotiation, but what I will tell you is there's a lot of incentives for new construction, as I've shared with you, and there are sellers out there that have a high level of motivation. So what you need is to make sure that your agent is going to go to bat for you and get all of the information that you need to make a good decision when making that offer. And that includes having a conversation with the listing agent, truly understanding what the goal of the seller seller is, because many times you can go ahead and accommodate the seller when it comes to maybe post-closing possession, maybe when an ideal closing time frame for them, maybe quick on the due diligence. In turn, the seller will be able to be willing to give you a concession when it comes to doing a price reduction or some kind of a monetary concession for closing costs or so forth. So there's a lot of ways to negotiate and navigate these markets. We've seen this market. This is our 32nd year in northern Colorado. So we've seen these tides turn before, and we're prepared to help you. So don't hesitate to reach out to us. We're here to help you out with any of your needs. You can feel free to drop me an email. You have my email and my cell phone down below, 970-396-7248. Again, we're here to help you in your in the Colorado Front Range, and we hope you enjoy the summer and enjoy the rest of July and these warm months and what summer has to bring for us.